Stock trading is, at its core, the simple act of buying and selling shares of a company. When you own a share, you actually own a tiny piece of that business. Investors, hope to buy these shares at a low price, and then sell them later at a higher price to make a profit. For a very long time, this whole process relied on human intuition, deep research into company reports, and honestly, a bit of luck. Traders would spend countless hours reading newspapers, listening to financial news, and trying to make sense of the complex forces that cause a stock's price to go up or down. It was a manual, slow, and often emotional process where success really depended on experience and quick thinking. Technology has always played a role in transforming the stock market. The invention of the telegraph and the ticker-tape machine way back in the 19th century made it possible to share price information much faster than ever before. This was a huge leap forward, allowing investors who weren't physically on the trading floor to participate. Then came the internet, which brought trading right into our homes. Online brokerage platforms democratized investing, making it accessible to almost anyone with a computer. This digital revolution, honestly, was just the beginning, paving the way for an even more powerful and intelligent tool to enter the financial world. Now, we're in the middle of another great transformation, and this one is driven by artificial intelligence, or AI. AI is a type of computer science that lets machines learn, reason, and make decisions in ways that are actually kind of similar to humans. Instead of just following a fixed set of instructions, an AI system can analyze huge amounts of information, recognize patterns that a person might totally miss, and adapt its strategy over time. In the world of stock trading, this capability is honestly revolutionary. It moves beyond just providing data faster. It offers a way to understand that data on a much deeper level and even predict what might happen next in the market. This evolution from human-only decisions to AI-assisted strategies marks a really fundamental shift in how we approach investing. The modern investor is no longer just competing with other people. They're up against incredibly powerful algorithms. These AI systems can work 24 hours a day, 7 days a week, without ever getting tired or emotional. They can process global news, social media trends, and economic reports in the blink of an eye. This new era means that, to succeed, investors must understand and leverage the power of AI, making it an essential tool for anyone serious about navigating the complexities of today's financial markets. At its core, artificial intelligence for trading involves using complex computer programs, often called algorithms, to analyze market data. These systems are designed to find profitable trading opportunities by sifting through massive data sets. Think of an AI as a super analyst that can read every financial report, every news article, and every social media post related to a company in just a few seconds. It looks for hidden correlations and patterns that would be impossible for a human to detect. For example, an AI might find a connection between the weather patterns in Brazil and the stock price of a coffee company, allowing it to make a prediction before the rest of the market catches on. One of the biggest benefits AI brings to trading is incredible speed. In financial markets, even a fraction of a second can mean the difference between making a profit and suffering a loss. High-frequency trading firms use AI algorithms to execute millions of orders in milliseconds, capitalizing on tiny price differences that exist for only a moment. This speed gives them a significant edge. For the average investor, AI-powered tools can also help make faster, more informed decisions. Instead of spending days researching a stock, an investor can use an AI platform to get a comprehensive analysis instantly, freeing up their time to focus on the bigger picture and overall strategy. Beyond speed, AI offers superior predictive capabilities. These systems use a technique called machine learning, where the algorithm is trained on historical stock market data. By analyzing what happened in the past under various conditions, the AI learns to identify signals that might indicate a future price movement. It can assess market sentiment by analyzing the tone of news articles or social media chatter, gauge economic health from government reports, and even factor in company-specific events. This allows the AI to generate more accurate forecasts about whether a stock is likely to rise or fall, giving investors a powerful tool to guide their choices. This ability to process vast and diverse types of information leads to more objective and data-driven decisions. Human traders can often be influenced by emotions like fear or greed, leading them to sell during a panic or buy into an overhyped stock. AI, on the other hand, operates purely on logic and data. It follows the rules and patterns it has learned without any emotional bias. This disciplined approach can help investors avoid common psychological traps and stick to a sound long-term strategy. By removing emotion from the equation, AI helps create a more rational and potentially more profitable investment process for everyone involved. Some of the world's most innovative companies are not just using AI for trading, they're actually building their entire business models around it, which in turn makes them interesting investments. Palantir Technologies is a prime example. The company specializes in big data analytics and has developed powerful AI platforms like Foundry and Gotham. These systems are used by governments and large corporations to make sense of huge, complex datasets. For instance, Palantir's AI helps the Department of Defense with mission planning and has been instrumental in creating data systems for national security. Its deep integration of AI into critical operations has driven significant revenue growth and made it a key player in the AI sector. Another giant leveraging AI is Meta Platforms, the company behind Facebook and Instagram. Meta uses sophisticated AI to power its advertising business, which is the core of its revenue. Its Advantage Plus tools use AI to help advertisers automatically find the right audience and optimize their campaigns, delivering a much higher return on investment. In 2024, these tools boosted advertiser returns by 22%. Meta is also investing heavily in its open-source AI models, like Llama 4, which will allow other businesses to build their own AI agents. With billions of users generating data daily, Meta's AI has a unique advantage in understanding consumer behavior, making its platforms incredibly valuable for businesses worldwide. Across the globe in Southeast Asia, Sea Limited has shown how AI can engineer a dramatic corporate turnaround. The company operates in e-commerce with Shopee, digital finance through Sea Money, and gaming with Garena. After a tough period, the company's stocks soared in 2024 thanks to its strategic use of AI. Through its Sea AI Lab, the company has been enhancing user engagement in its games, improving logistics and product recommendations on its Shopee platform, and refining risk assessment for its digital loan portfolio. This AI-driven efficiency helped Sea Limited swing from a major net loss to a significant profit, proving how AI can directly boost a company's bottom line and shareholder value. These companies demonstrate that AI's impact extends far beyond just stock prediction algorithms. Their own success is a testament to the power of integrating AI into core business functions. For investors, this creates a dual opportunity. First, they can use AI-powered tools to analyze these and other stocks. Second, they can invest in the very companies that are leading the AI revolution. The performance of Palantir, Meta, and Sea Limited shows a clear trend. Businesses that successfully harness AI are positioning themselves for strong, sustainable growth, making them compelling long-term investment prospects in this new technological age. While the potential benefits of AI in stock trading are immense, it's crucial to acknowledge the risks. One major concern is the possibility of algorithmic errors. An AI model is only as good as the data it is trained on and the logic it is programmed with. If the training data is flawed, or if the algorithm contains a bug, it could lead to disastrous trading decisions, causing huge financial losses in a matter of seconds. Furthermore, AI models are often so complex that they operate as black boxes, meaning even their creators may not fully understand how they arrive at a particular conclusion. This lack of transparency can make it difficult to identify and fix problems before they escalate. Another significant risk is the market's inherent unpredictability. AI models learn from historical data, but they can be caught off guard by unprecedented events, often called black swan events, like a sudden geopolitical crisis or a global pandemic. When the market behaves in a way that has never been seen before, the AI's predictive models can fail completely. This could lead to a cascading effect where multiple AI systems, all making similar flawed predictions, amplify market volatility and trigger a crash. The reliance on past patterns can become a major weakness when the future refuses to follow the same script, highlighting the need for human oversight. The importance of human control cannot be overstated. While AI can provide powerful insights and execute trades at incredible speeds, the ultimate strategic decisions should remain in human hands. An experienced investor can provide context, ethical judgment, and common sense reasoning that an AI currently lacks. The most effective approach is a partnership where AI serves as a powerful co-pilot, handling the heavy lifting of data analysis and pattern recognition, while the human investor acts as the captain, setting the overall direction and making the final call. This hybrid model balances the strengths of both machine intelligence and human wisdom for better outcomes. Looking ahead, AI is undeniably set to become an even more integral part of the financial landscape. Its role will continue to expand from a niche tool for large institutions to an essential assistant for everyday investors. As the technology becomes more sophisticated and accessible, it will further level the playing field, offering powerful analytical capabilities to a broader audience. For future traders and companies, embracing AI will no longer be an option, but a necessity for staying competitive. Successfully navigating this new world will require a deep understanding of both the immense opportunities AI presents and the significant risks it entails, ensuring a smarter, more efficient, yet carefully managed future for trading.